It's at 58.25 now. It's been as high as 58.53 this morning. And I sent you something from a post from Bullion Star, and I'm going to share it here with you and the viewers. Bullion Star, they're in Singapore, of course, and it says record silver prices aren't slowing demand, they're accelerating it. Lines formed outside our bullion center before we even opened. This week's silver sales are already up 84% versus last week, with 3 days still to go. Customers are buying more silver at record prices, not less. It's not even talked about. And I saw it this morning, Clive, on the FT. The main story is about stocks, not about the fact that gold and silver have done really well, but U.S. stock sets for double-digit gains in 2026.
Based on analysis by Clive Thompson and insights from Manco 64, the gold and silver mining sector is a severely undervalued opportunity with explosive potential. Key catalysts include the leveraged profit effect, where a 33% gold rise can double mining profits, a $1 trillion 401k rule change unlocking institutional capital from February 2026, record physical silver demand with sales surging 84%, and major production ramps from top picks like Alamos Gold and Equinox. Furthermore, the collapsing gold-to-silver ratio suggests silver could massively outperform, while political moves like Italy's debate over its national gold reserves add another bullish layer. Yet, despite these powerful drivers, the sector remains ignored by mainstream media and critically underowned by fund managers, creating a final window for investment before forced institutional buying begins. Subscribe to Fine Metals for more updates.
Any specific silver miners in the video, but I can tell you, Mario, I've done some research on the silver mining sector, and I'm not going to say the names today, but there's a couple of very, very attractive silver mining companies where the price should be down the line based on the current price, or even a price of $50 or $40 if you like. The price of those silver miners a year or two from now should be several multiples of where they are now.
Is that he expects that the higher the price goes, the more people are going to want it. It's going to be like flaunting your wealth. With silver at $20, it wasn't like worth it, but maybe at 100, 200, or even 300, it's going to be, could be the new gold, so to speak, in terms of flaunting what you have. Is this?
Well, precious metal mining companies, I think that a lot of them are reflecting a price of gold, silver, or platinum, which is way below the current price. They're not yet reflecting the potential profits increase they will have when, let's say, assuming that the gold price stays where it is at the moment. I'm going to illustrate that to you. Let's assume you have a gold mining company, and I'm talking about gold, it could be silver, and the gold mining company digs the gold out of the ground at a cost of $2,000 an ounce. It sells that gold last year, let's say at a price of $3,000 an ounce. So what's its profit? Its profit is what it sold it for, $3,000 minus the cost of digging it up, $2,000. So its profit is $1,000 an ounce. But this year, let's say the price is $4,000. It's gone up $1,000 from $3,000 to $4,000. So they're still digging the gold up at $2,000 an ounce in terms of the cost of digging it, but they're now selling it at the market price of $4,000. The gold price is a bit higher than that now. So it's the gold mining company digging it out at $2,000, selling it at $4,000, is making a profit of $2,000 an ounce. That's a 100% increase. It's doubling the profits that they made before. Last year at 3,002 they made 1,000, and 4,002 they make 2,000, so the profit has doubled. But the gold price only went up from 3,000 to 4,000. That's a 33% increase. But the 33% increase produced a 100% increase in the earnings per share of that illustrative company. My advice to any portfolio manager is you need to have something of everything, Because when you face your clients 6 months from now or 3 months from now, and you're talking about last year's performance, the 2025 performance, your clients are going to be wanting to hear about the good things you bought. If you bought something which went down, and indeed that's what's happened this year. Many gold mining companies have seen their share price increase by more than 100%, and I'll just talk through them. The first metric is I only want to look at companies which have a 1-year return, a share price increase of at least 80%. If a share has gone up by above average, and here's the most important parameter I'm looking for, I'm only looking at companies which are expected by the analysts to increase their earnings per share by at least 20% a year for the next 3 years. In other words, I'm looking for growth companies. So I'm going back to this stock screener, and we can see that Alamos Gold is here. I'm just going to click here, and I'm going to talk generally for a second or two about the prospects for the company and the reason why I think it's going to go a lot higher. The main catalyst will be the ramp up in production of one of their mines, which is called Magino, and the increasing gold production, which is going to come from that mine. Their all-in sustaining costs, according to them, are already very low at $1,425 an ounce and is expected to drop by $250 to $1,175. The next company we're going to look at is called Equinox Gold Corp. Equinox Gold Corp. It merged with a company called Calibre Mining earlier this year, and that makes it the largest gold producer. Dig out a lot more gold next year than last year. So this year it's looking at 785,000 ounces of gold being dug up, and next year 2026 is looking at going towards 1 million ounces of gold.
It means that silver is outperforming. So let's do it a monthly so people can have an idea. So you can see that in 1980 here, when we had the top in the precious metals bull market, the gold silver ratio went to 15-1. And also in 2011, it went to around 30-1. It can get back to 15-1. So I think there's still a lot of room for silver to outperform gold. It doesn't mean to say gold is not going to keep going up. It's just that silver is going to be a stellar performer, in my opinion.
So Harmony Gold is a South African company. And don't forget, South African carries a certain level of risk, political risk. Of course, Harmony Gold is a very old, long-standing company, so hopefully they can navigate these types of risks. Harmony Gold has a catalyst to go higher, is a copper project they've gone into in Australia called Eva Copper. Always, whenever I went to a petrol station, started to learn the rules, you always count out the precise amount, if you can, in the notes, making sure you've got the right number of zeros on every note.
Yeah, so I've got it here. What did you know? 20 Italian lira back in the days of the gold, I think the Latin monetary union of the 20th century. It was just like the 20 franc gold coin. So it was 1-to-1. Just goes to show how much they inflated that in the 20th century. I'm not sure if you got it. Something about an executive order that President Trump signed back in August, and I'm going to bring it up because
Oh, yes.
I heard someone talk about it maybe on X, and very few people are actually, especially in the gold space, mentioning this. And it's executive orders, right? August 7th, 2025, democratizing access to alternative assets for 401k investors. And yes, let's have a look here. they're talking about that they want to make commodities and also it's right here direct and indirect investments in commodities. So I would say that's like the physical commodity, i.e., gold and silver, or the mining companies. Possible that we could see a lot of money going into the mining sector from the 401k policies. And I think they've got about 9.3 trillion in there.
It's always at the top of the graph, and they assume because you've got this graph, it's at the top and it can't go any higher. And then 5 years later, what looked like the top is sort of a quarter from the bottom. So, what I urge investors to do when you're looking at a chart, always make sure the finishing level is halfway up and halfway down, so you don't get confused by the fact it seems to be at the top. Because I've had a lot of over the last 3 years, really, I've had constant messages saying it's too high. Whether we're talking, it doesn't matter what we're talking about, but we're talking about stocks or we're talking about gold, silver. It's too high. I'm going to wait for a pullback. And of course, those people never got the pullback they were waiting for. And the reason they said it was too high was they looked at a chart. It looked like it was at the top, therefore it can't go above the ceiling. And then that ceiling moves higher. I think the price of silver will also depend on to what extent we have a depreciation or a confidence crisis related to currency. If at some point we have a crisis of confidence related to currency, I think there's going to be a huge rush. Next company is called Valterra Platinum. It's a platinum company, of course. It used to be called Anglo-American Platinum, and it was owned by Anglo-American PLC. In about May this year, Anglo-American PLC spun off its subsidiary, Anglo-American Platinum, which then renamed itself as Valterra, a newly independent company. It's a big company with about 30,000 employees, but it's based in South Africa, which has got all the political risks which go with South Africa. But the reason I'm recommending it is I think that the platinum price is going to rise quite dramatically. Prices over the medium term, mainly because persistent supply deficits and new industrial uses are tightening an already small market. Now, that's basically what AI has got to say about platinum, i.e. there's a supply shortage. Historically, platinum used to be double the price of gold. At the moment, it's about half the price of gold, so there's a lot of room for the price to catch up. And what's more important, platinum is a very tiny, tiny market compared with gold, so just a little bit of investment demand could drive the price of platinum significantly higher.
Ago, I think December 3rd, but yeah, it says ECB urges. Oh yeah, I think the Maloney comment was before December 3rd, but it says ECB urges Giorgia Meloni's party to rethink declaring Italy's gold belongs to the people. Any law affecting legal status of gold reserves would risk Bank of Italy's independence, warned central bank. Well, I sent you that thing from the ECB, right? And it was written, I think, by Lagarde, who's a lawyer. And she basically said that, yes, it does belong to the people, but it should be managed by the Bank of Italy and indirectly by the ECB.
Engaged in the carry trade, but as the yield on Japanese bonds rises, that makes that trade less attractive, and there'll be some people who are completely at the wrong end of it, and we'll have to wait and see if anybody gets into a panic. But what we're seeing is a rapidly,
I'd say.
Actually, the dollar's come off quite sharply in the last few days. It was like the DXY, the dollar index, was at 100. And I saw yesterday it was at 98 something, which was quite a big move in a couple of days. I'm just looking to see where it is now. The DXY is currencies. It's 98, 96 now. It's come back a little bit.
Yeah, the Japanese 10-year yield is almost up at 2%. And it looks like the Bank of Japan is going to raise rates. And if the Fed cuts rates, I could see the yen rising. The dollar seems to have topped against the yen already around just below 160. I could see that maybe yeah, affecting this liquidity because of the yen carry trade. I think the most important thing for the yen carry trade is that the yen remains weak. But if the yen continues to appreciate or the dollar continues to drop, I could see that as a problem. Isn't that the way you see it too, Clive? Or